In one corner, you have a champion with a 5,000-year winning streak, an asset forged in the hearts of dying stars and coveted by literally every empire in human history. And in the other corner, a digital disruptor that didn't even exist 2 decades ago, built on nothing but pure code and cryptography. This isn't just about investing. It's a monumental clash for the future of finance. So, let's break down this battle for supremacy.
So, let's just start with the biggest question of all, the one that's probably on your mind, especially in a world with rising inflation and, let's be honest, a whole lot of uncertainty. When you look ahead to the end of this decade, where do you put your trust? What asset is really going to protect your wealth and preserve your buying power?
And this brings us to a genuine battle for dominance. We are pitting the undisputed heavyweight champion of value, gold, against this lightning-fast, revolutionary challenger, Bitcoin. Both of them are making a really compelling case, and both are vying for that title of the ultimate safe haven asset in this crazy world we're living in.
This really just captures the whole conflict, doesn't it? On one side, you've got the ancient standard. It's physical, it's tangible, a store of value so trusted it literally became the bedrock of global economies. And on the other side, the digital challenger. It's just code, it's borderless, and it's built for the internet age. I mean, these represent two completely different philosophies of what value even is.
Okay, so let's start with the reigning champ, gold. To really understand its power, you have to appreciate just how deep its roots go. We're not just talking about another asset on a balance sheet. This is a fundamental part of human history and our psychology.
I mean, just look at this timeline. It really puts gold's staying power into perspective. We're talking 5,000 years, from the pharaohs of Egypt being buried with it, to the Roman Empire using it to pay its armies, all the way through to the modern era, where it literally backed the entire global financial system. You know, every single major civilization has trusted gold. That kind of track record is almost impossible to replicate.
And if you think this is all just ancient history, think again. In 2024 alone, central banks, we're talking the big players, bought over 1,000 tons of gold. So why are they doing that? Well, they're trying to diversify away from the US dollar, hedge against their own inflation, and hold a neutral asset that's outside of any one country's political control. When the most powerful financial institutions on the planet are still stocking up, that tells you this is still very much a modern story.
So this brings us to gold's core strengths, right? First, it offers unmatched stability. Yeah, the price moves, but it doesn't have those crazy 50% swings you see in newer assets. And crucially, it exists completely offline. No internet, no electricity required. In a world that's getting pretty worried about cyber attacks or power grid failures, that's a huge feature. All this has built this deep, psychological trust over generations. And history shows, when things get chaotic, gold tends to perform.
But it's not perfect for the modern world, is it? I mean, gold is heavy. It's expensive to store securely. Trying to move $1 billion worth of it across a border, that's a massive logistical nightmare. And you can't exactly go buy a coffee with a little shaving of gold. So its physicality, the very thing that makes it so strong, is also its biggest weakness in an age of instant digital everything.
Okay, now let's turn to the challenger, Bitcoin. It has no physical form, no thousands of years of history. Instead, it was born from code designed specifically after the 2008 financial crisis to solve the problems of a digital world where, frankly, trust in traditional banks was at an all-time low.
So at its core, Bitcoin is a decentralized digital currency. It was created back in 2009 by the mysterious Satoshi Nakamoto. And its key feature is that no single person, no government, no bank controls it. Instead, all the transactions are verified by a network of computers all over the world. It's a network run by its users, which is a pretty revolutionary idea in finance. It just removes the need for that trusted middleman.
Now I want you to focus on this number, 21 million. That is the absolute final number of Bitcoins that will ever exist. It's written right into the code. Unlike government currencies that can be printed pretty much endlessly, Bitcoin has mathematical scarcity baked right in. This is its absolute central value proposition.
And this design gives it some incredible advantages. I mean, you can send $1 billion worth of Bitcoin anywhere in the world in minutes for pretty low fees. And now we're seeing these massive institutional players like BlackRock jumping in with their ETFs. This is a game changer because it provides a regulated, easy on-ramp for trillions of dollars from pension funds and mainstream investors. It's a huge signal that Bitcoin is really starting to mature as a legitimate asset class.
However, let's be real, the risks are just as significant. Its price can swing wildly, and that scares off a lot of conservative investors. Governments are still trying to figure out how to regulate it, which creates a ton of uncertainty. And the whole debate over its energy consumption is a constant headline risk. Navigating these complexities is key. And smart investing starts with better information, so be sure to subscribe to Smart Money for more insights like this.
So, with the profiles of our two contenders laid out, let's look ahead. What does the financial landscape actually look like as we head towards 2030? This is where the real showdown begins, where theory meets reality.
This table gives us a fantastic snapshot. First, just look at the market cap. Gold is sitting around 14 trillion, while Bitcoin is just over 1 trillion. That means Bitcoin would need to grow more than 10 times just to catch up. But then, look at the supply. Gold's is slowly expanding as we mine more, while Bitcoin's is mathematically fixed. And ease of transfer, it's night and day. You can see the battle lines drawn perfectly. History and size versus scarcity and technology.
So based on all that, experts pretty much see three main paths forward. Scenario 1, the world stays cautious, maybe after a major cyber event or something, and gold just remains king. Scenario 2 is what crypto enthusiasts call the flippening, where massive institutional investment causes Bitcoin's market cap to actually overtake gold's. And yeah, that could imply a price of over $700,000 per coin. And then there's Scenario 3, which is probably the most pragmatic, a hybrid future, where smart investors don't choose. They use both. Gold for stability, and Bitcoin for its growth potential.
This all brings us to the core theme of this entire debate. It goes so much deeper than just numbers on a screen or bars in a vault. It's about a fundamental evolution in what we, as a society, choose to trust with our value. So what's driving this whole conversation in the first place? Well, with central banks printing more and more money, a lot of investors feel like the cash in their bank accounts is just silently losing value every single year. This pushes them to look for real assets, things that can't just be created out of thin air. And right now, gold and Bitcoin are the top two candidates. And this right here is the ultimate takeaway. This isn't just gold versus Bitcoin. It's the tangible versus the intangible. It's the past versus the future. The real question is whether our collective trust, which has been anchored in physical objects for millennia, can finally migrate to something secured purely by math, cryptography, and a global, decentralized network.
And so, I'll leave you with this one question to think about. By 2030, will our financial system place more faith in 5,000 years of physical history or in 21 million units of verifiable digital scarcity? The answer to that question is going to define the future of wealth for generations to come.
Just a reminder, this explainer is for educational purposes only and is not financial advice. Thanks for joining us.